In the trenches. We're going to kick it off with gold well over 1,500. But first, I want to start with something, Scott, that you said to Mark Haynes 2 years ago about gold hitting 1,500. Check it out.
30%, 40%, you're still going to get hit with capital gains from all of that.
Hey, Mark, I have something for you for next year.
Just tough.
Okay, watch gold. Okay, I'm making a bold call on gold that I think it goes over 1,500 an ounce next year.
You're going to cry.
On 1,500 an ounce.
1,500 an ounce.
Yes.
Wow.
I will send a note if that happens, and we'll rediscuss, because a lot of times I've been very correct on this show.
Yeah.
I predicted the down move. I predicted where the bottom would be, and you sometimes forget where we are.
No, you were a little shaky on that bottom. Hogan was much better on the bottom. Okay.
Ben, major prediction. Way to go. I have to give you some props on that. So what are you doing now? You were in a tier 1. You were holding long. Where are you at now, and how'd you get there?
That's a great question. So I want to show you guys a quick little flashback, the anatomy of this gold trade since March. I know sometimes we go over this a few times, but patterns repeat themselves. I want to show you how you could have gotten in and how you could have profited by not being a genius, but just looking at the charts here. You take a look at the chart here in gold. We talked about this descending channel. Okay, gold was actually out of play the first month of the year. Then when it broke this descending channel right here, that's when we talked about your tier 1 entry at 131 in the GLDs. You had a nice move back to these recent highs. Consolidated again. Then on your show, Alex, we talked about adding to this breakout above this 141, 142 area for what now has been a healthy move to almost 150. So technically, gold has been trading great, giving you areas to add, take off, take some profits.
Would you be selling some here and get some profits in?
If you're in a tier 2 or a tier 3 gold right now, you should definitely be taking some off, but stick with some. You know, the hardest thing to do with something that's working is staying in the trade. So if you think you're in tier 1 and you're going to get flat, you're not going to get back, stay with gold. We should see higher prices. But you could sell some if you're in tier 2 or tier 3.
I think what investors can get caught up in, especially with gold, especially retail investors, is that when they see this kind of momentum, they want to jump in right now. They're scared it's going to go to 1,600. They're not going to be in it, and they're freaking out. That's probably really bad advice, right?
Yes, and that's why they should be watching this show so we can teach you how to enter and exit like a pro. And I think you guys are learning. We've been getting a lot of emails. I thank you for all that.
So if we do see a sell-off, then that would be a good time to add, I guess. Or
yeah, well, if you could take a quick look back at this chart, it's still just leaving the 10-day. I still think it has some more room to extend. Just to be entering here after your few calculated entries, I just think it's hard to do unless you could stomach a little bit of a pullback, which we could see if this dollar finally gets a little bit of a bounce, which we have not seen, but that trade's getting crowded there.
Yeah, okay, let's go to silver, too. You were shorting it. You were shorting it more yesterday. Did you wind up going long at all?
Well, I'm going to show you a quick 3-minute chart and show you how charts work on different time frames. We've been short since last week. I did cover into the move lower, for that 6-7%, but I wasn't sure if it was going to go based on what Big Ben would say. So if you were prepared and you said, okay, if Big Ben doesn't come in and support this dollar's going to fall, you got to cover silver. So if you take a quick look at this 3-minute chart in silver, which I want to show you, I know if you're not a pro, it's fine, but I want to give you a little lesson here anyway. This was yesterday's open. It was hovering by the lows. This is when Big Ben started to speak. Spike up in silver. If you were short,
that's when the Fed decision came out, actually.
Oh, that was a Fed decision?
Yeah, that was a Fed decision.
Okay, so that was your first clue. Okay, maybe I better cover this silver just in case. So this was a spike up. Then it went sideways. So I said to myself, if silver gets above the morning high and the spike up on the Fed thing, I'm out. So I covered my silver at 44.90, around 45. And that's also where traders who were flat silver said, you know what, I'm going to ride this. It just went down 7-8%. It might not get 10 to 15%. So they bought there, and then look at this move in silver. Huge move yesterday into new highs today. You go back to this daily chart, and now it engulfed this correction, and it could squeeze further.
Well, interesting to note, though, is that it's not actually at new highs, and gold is. So something to just watch out for. Okay, let's get to the stocks real quick. I want to talk about Barrick. Reported earnings yesterday. It was totally in line. Outlook was in line. Stock has been hit, though, because of its announced an acquisition for Equinox, which basically doubles its copper production. So now Barrick is not a pure play.
Right.
It's a copper gold hybrid, I guess. That's what I'm looking for. So is that a good strategy? And I point this out because in 2010 it was for Freeport. Freeport is gold and copper and was up over 45%. Barrick was up about 31%. But in 2011 it hasn't been. It's really been the year for the pure gold plays. What do you think of the chart?
Well, it actually frustrated short-term players considering that it looked good, it was at highs, corrected. So if you think long-term this is going to be good fundamentally, you could buy a little bit here. I'm going to stay away from it. I still don't have much success in these mining stocks.
No one is really. I mean, and it's lagging. But if they report really good earnings and really good cash flow, the ones that are superior are going to make it. I want to highlight two super fast, like 30 seconds.
Okay.
Goldcorp reporting next week. One of the lowest cost producers, has one of the largest silver mines in the world, who's going to help offset the cost of producing an ounce of gold. Can you buy it?
If you believe in the story, it's at highs. If they come out with good earnings, maybe it'll be a catalyst. It still looks good. This one has been a leader and is still acting well.
And U.S. Goldcorp up over 200% in 2010, up over 18% in 2011. The reason why this gold stock is really cool, it's in exploration. Cool. It's cool. Is that CEO Rob McEwen made Goldcorp what it is. I mean, he was the one who brought it from like a couple $1 million company to what it is today. He owns 20% of U.S. Goldcorp, which is a really big deal, and he's going to want to do the same thing. He's going to want to buy and make it this big, awesome gold company. So, chart.
Symbols.
Yeah, UXG.
UXG. I looked at this actually today,
yeah,
and this looks good. I would have liked to have seen you buy a little bit on this breakout here around $8, but it's still hovering nicely. I think if it gets above this 950.10, it could go, and it sounds like this CEO does have a lot of experience underneath his belt, so why not? This should be on your radar and could be in your portfolio.